some cryptocurrencies do so well versus global liquidity. For example, we see that Bitcoin is almost like 8x the performance of the Nasdaq. And so the Nasdaq is 97.5% correlated to, or it has an R squared of 0.97 to global liquidity, and Bitcoin's 85. The reason it's 85 is because when you get to a bull market, it actually wildly outperforms because of this, which is the network adoption.
Hey guys, welcome to Everyday Finance. Donald Trump, the President of the United States, has announced new Liberation Day tariffs with the intention of reducing trade imbalances and boosting manufacturing in the United States. China, up to 54%. Vietnam, 46%. Japan, 24%. South Korea, 25%. India, 26%. Taiwan, 32%, and the European Union, 20%, are among the countries that will be subject to significantly higher tariffs than the baseline rate of 10% that will be applied to all imports. A tariff of 25% has also been imposed on all automobiles that are imported. As of April 5th, the tariffs will go into effect, and beginning on April 9th, the higher country-specific rates will be implemented. Financial markets around the world experienced significant upheaval as a result of the announcement. As a result of investor concerns regarding inflation and the possibility of a slowdown in economic activity, the Dow Jones Industrial Average experienced a drop of 1,679 points, which was its largest single-day drop since the year 2020. The anticipation of price increases has caused consumers to rush to purchase automobiles, home appliances, and electronic devices, particularly in urban areas such as New York. Additionally, the cryptocurrency market exhibited a negative reaction. The price of Bitcoin fell below $85,000, marking its lowest level since November. Ethereum and XRP also experienced significant losses during this time period. Raoul Pal, the CEO of Real Vision, forecasts that there will be a significant spike in the value of cryptocurrencies in the near future, possibly beginning the following month. Watch the video ahead.
So it tells us a potential low. When I look at the daily, this brutal collapse from 280 something back down to 115. Again, we're now at a 7 count, would give us another 2 days. We would have a 9, 13, 9 bottom. So we're really starting to set up in many of these. I think SUI on a weekly as well was a perfect 9 signal. We're now looking where we might be in this is the daily. We're on a 10 of 13 and a 6 of a 9. So it kind of feels so close to me that we're at the capitulation time that you and I spoke last time back in September. And the forward-looking liquidity stuff looks good.
Yeah, so I think for the leaders of the crypto ecosystem like Solana, that looks to me like if now we see the response from central banks and liquidity starting to pick up, you've got a false break below a very important support level. And typically when you see a false break, the reaction to the upside is pretty dramatic because it always catches people offside who get very, very short right into the bottom end of that range. So that's, I think, with Solana and a couple of the large caps like SUI. There's been so much destruction in like the DeFi space. Like if you look at DeFi charts, they have broken through the 1-year lows, and so they're just in free fall, right? Whereas Solana,
and that would make sense because on-chain activity has been so low.
They are hypersensitive to the change in on-chain activity, and they're higher beta, so they get sold first. And so I think that like for them, the leadership will come from Bitcoin first, Solana, even Ethereum, and then it will flow through into some of the DeFi assets, which I mean, just from a fundamental standpoint, they are looking increasingly attractive. It's just that the price action right now is shocking. And so I've been very reluctant to add any new assets into the portfolio as the prices have been sort of coming back. And I'll probably be a little bit late before, in adding them as well, because I want to see the price structure start to change. But they are trading on like multiples to fees, even with the fee reductions from the drop off of activity, at sort of historic lows. So, I think that it all bodes very, very well. And, I think Bitcoin will lead the sector out.
And how's positioning in Bitcoin? I know you got a chart I'm seeing on the chain about Bitcoin futures are subdued. Where are we with all of the market positioning? How short is the market going into this, or how kind of non-frothy is it? Have we unwound all of the excess leverage that was there?
Yeah, and it's unwound for really the last sort of 5 months. I mean, it peaked in December, and then since then it's been coming down. So funding rates are extremely low. There's nothing there that suggests that the market is overpositioned at this point. I haven't looked at realized losses. That's a very good indicator for Bitcoin, and I don't have a chart on that. But in terms of just futures activity, the open interest has backed off. So open interest and funding rates are the two components of my derivatives risk score for Bitcoin. And I'm not sure if this is visible, but let me see if I can bring it up. Really what happened in Q1 of 2024 was an extreme reading for the derivatives risk score. But since then, actually, it's been fairly moderate. So,
I mean, how similar that is to the kind of 2021 period where you come into the year and then the whole thing just gets subdued for a period of time.
yeah,
Also, the one I look at a lot, where it's not on here, is 2017, where I think there's a lot of similarities, but it feels that everything is unwound.
yeah. I mean, it almost feels like that move in 2024 was actually the most similar to the 2019 mid-cycle rally. They just went too far, too fast. Remember when it came off in 2018, at the end of 2018, Bitcoin bottomed, and by I think it was sort of April, so within like 5 months, the thing had 5x'd. And so the futures market was pretty immature back then. It was, BitMEX and maybe one or two others. But it's really the rate of change that scares, that it gets things, is when you should be most concerned. And the rate of change in terms of the open interest and funding rates at the back end of 2023 into 2024, when the ETFs launch, was very extreme. But at that point, again, we weren't in some sort of like massive bull market or the end of a bull market, and liquidity was actually tight. So, these readings I don't think are indicative of end of cycle readings. They are just the typical mid-cycle exuberance that happens with Bitcoin. And like the end of cycle readings you get only once liquidity has expanded considerably, and the Bitcoin price has obviously moved a lot.
It is the contention of Raoul Pal that the economic policies implemented by President Trump, in particular tariffs, fiscal stimulus, and a preference for loose monetary policy, are ultimately intended to bring about a degradation of the United States dollar. Pal notes that tariffs frequently backfire, leading to inflation, disrupted supply chains, and retaliatory trade responses. Though Trump advocates for tariffs in order to support domestic manufacturing and reduce trade deficits, Pal points out that these measures frequently backfire. As a result of Trump's support for low interest rates and large government spending, inflationary pressure and national debt are both increased, which further weakens the dollar. A falling dollar, as stated by Pal, is beneficial to the exports of the United States, but increases the cost of imports, which in turn makes inflation worse. The weakening of the dollar, according to Pal, is bullish for cryptocurrencies. When the purchasing power of fiat currencies decreases, assets such as Bitcoin, which have a fixed supply, become more appealing as potential stores of value. Throughout its history, Bitcoin has experienced a surge in value during times of increased global liquidity, such as in the year 2020, when massive investment into risk assets was driven by stimulus spending. Pal is of the opinion that the long-term impact of Trump's new tariffs will be beneficial for cryptocurrency, despite the fact that they have caused short-term market volatility and losses for the cryptocurrency. If inflation continues to rise and economic growth continues to slow, the Federal Reserve may be forced to ease policy once more, which would set the stage for yet another significant rally in cryptocurrency prices. Watch more.
All these things sort of combined, I mean, I think the market and the outlook is very, very promising, because once we have rules, and I used to be very much an advocate for like, hey man, this is decentralized, just let the whole thing sort of like be its own thing and everyone will work it out. But in equities, we do have basic reporting which is required of all companies, and I think some sort of reporting logic that's enforced on protocols, if they're not sufficiently decentralized, where insiders control a large part of the supply, then they should be.
Which is most new tokens, right? It takes a long time to decentralize and distribute tokens.
Yeah. Yeah, and it gives them a pathway to decentralize. More onerous the requirements are for centralized tokens, hopefully, the faster they will want to decentralize. And that's what we're all here for, really. Yeah, so I mean, the other thing is just that I think that discrepancy between the value of smart contract platforms and the applications that sit upon them. So if you look at fees now, and if you delineate between the fees that are being generated by smart contract platforms and the fees that are being generated by DeFi protocols, on a daily basis, they're now about even. Now, that's a huge shift in the balance, because it used to be all generated on smart contract platforms. But as DeFi protocols have actually seen a real uptick in usage, they have actually started to accumulate as much fees as smart contract platforms.
And is that also because so much DeFi is on ETH, and so much of ETH fees have contracted because of the change in ETH and the layer twos?
That's it. I mean, yeah. So the dynamics with ETH have had a huge impact on it, for sure. But it's also there have been, other ecosystems which have started to organically grow. And so that is also a large reason as well. But at the end of the day, activity within the crypto ecosystem is still highly concentrated amongst just a few platforms. And that's why there is this sort of large cap bias within the sector. I mean, you can have flash in the pan protocols that outperform for months and maybe even longer. But eventually, if the activity is not on that chain and the activity is not sustainable, i.e., the incentives that protocols will provide to draw users on, to draw developers on, if that doesn't stick over the long term, then that price performance fades really quickly.
And this is basically what I've always talked about when I talk about network activity and Metcalfe's law. This is a much more detailed way of establishing how vibrant is the network, how real is the activity, what's the longevity like, what's the growth like, because these are the things that drive price. We know that obviously global liquidity drives price, but the other thing is the network has to be valued, and network value is what drives the long-term secular trend above and beyond that of liquidity. This is the magic of why some cryptocurrencies do so well versus global liquidity. For example, we see that Bitcoin is almost like 8x the performance of the NASDAQ. And so the NASDAQ is 97.5% correlated to, or it has an R-squared of 0.97 to global liquidity. And Bitcoin's 85. The reason it's 85 is because when you get to a bull market, it actually wildly outperforms because of this, which is the network adoption.
As a form of retaliation for President Trump's comprehensive new tariff plan, China has announced that it will impose a tariff of 34% on all imports from the United States, and it will go into effect on April 10th. As a result of this, China has taken its first significant countermeasure, which has escalated the trade tensions between the two countries. The State Council Tariff Commission of China criticized the United States' action, describing it as a violation of international trade rules and an act of economic aggression that was carried out unilaterally. As a result of this new development, the ongoing trade war has become more intense, and there are now concerns regarding the possibility of disruptions to global supply chains and markets. Investors are getting ready for increased volatility and uncertainty as a result of the fact that both countries are currently engaged in a tariff exchange that is similar to a tit-for-tat. This is especially true with regard to the general impact on global trade and economic growth. Additionally, the move may have an impact on the cryptocurrency market, given that rising geopolitical and economic instability frequently causes investors to shift their behavior toward or away from riskier assets such as cryptocurrencies. Thanks for watching.